All right, we got about a minute to go. Let's get the microphone check out of the way here. Let me know if you guys can hear me in the various chats here. We've got YouTube, we've got a Parsec remote share, we've got a Discord stream, we've got all kinds of stuff going on here. So go ahead and let me know if you can hear me in the various chats. And we're going to get rolling here in a little less than a minute. Okay, well, the timer ran out. I didn't quite meet the timer deadline there. Give me just a moment here. Let's get the squeaky microphone stand under control here. Let's get the music under control as well. There might be some Landy rants today. We'll see. We'll see. There's definitely some terrible takes that I can rant about. But maybe we'll save that for the very end. If you are in the YouTube stream, go ahead and hit like if you're here and logged in. I know that there's probably quite a few of you that actually aren't logged in if you are just watching this through X. So I have found out that that's where a lot of the views are coming from, that I can see you in one in my management screen or the stream management screen, but I can't see you in the concurrent view screen, like all this other stuff. I found out that it's got something to do with the X or Twitter when you just click the link there and play the stream through the actual web browser is what I found out. They've really goofed up links over there. They need to fix that. All right, so let me get the as I'm like having difficulties over here with the stream management software as I try to talk to drag things out while I fix this. Give me just a moment here. All right. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. I'm your host, Landy, and we are going to take a look at the lower term timeframes of Bitcoin today to start out the stream. And we will kind of analyze this most recent move up to the monthly overhead resistance around the upper second standard deviation of the Bollinger Bands. Yes, that's not represented on the screen right now, but we will get to that. It's from the Bitcoin in 60 seconds chart that you often see in my shorts videos. If you are not watching those, please go ahead and subscribe to the channel. You can find them typically, I upload them about 7:30 p.m. Pacific Standard Time. And they often get buried as there's tons of shorts videos. So if you can't find them, you got to turn on notifications. You can always check there, or you can go directly to my YouTube page and you can find them under the shorts tab. And we will be referencing that chart. So if you haven't watched the most recent one, I will review that here today. I did take a break for a few days as there was really no changes. We will also take a look at some higher term time frame closes, as there was some really interesting ones over the weekend and the Friday preceding that. And then we'll take a look at traditional markets, Dixie, and gold. Now, let me actually get over to the right screen here. Got too many screens going on. Let's go ahead and take a look at this most recent move up. This is going to be referencing an ongoing conversation that we've been having about volume-based swing, fail, and continuation zones. And that is where you can mark on a particular move, either to the upside or downside, the higher volume candles, typically on the wick and the close, depends on your preferences. And in this case, that will typically act as either resistance on mean reversion if it's a downside move, and or support on any mean reversion if it was an upside move. Now, we have been tracking this one since the most recent move up to 28,200 or so, and the failure and move back down. So we marked this chart up. We went over the swing fail conditions up there already, so we don't have that marked, but we do have the move down marked, and then as well as the failed high up here. Now, the move down is all the high volume candles on the move down. The yellow horizontal rays are going to be closes, and the white are wicks. Now, there are some places where you aren't going to see the closes marked as well. That's because the candles just stacked right on top of each other as it moved down. We got expansion of volatility to the downside. You'll often see things like this where we had a wick. We saw this move down, but we had a wick and then the close back inside of the wick. So the close and this wick are the same, around 26,129, so on and so forth. So we've been tracking this move back down or to the downside, and then the actual low on high volume. And I've marked the specific candles. So when we go over and take a look at today's move, well, it should be yesterday's move up. It's today's candle, but it was yesterday's move up. Started with this higher volume low relative to what we had seen over the weekend. We had Friday's low set to Friday's high set, and then we had weekend sideways price action. Now, when CME opened, we did see a fill of the CME gap as price was trading about $100 to $200 above CME here on spot, and we saw it come down and get filled around that 26,400 area. Now, on that fill down in this 26,400 area, I've marked this with teal because we are mean reverting. The bigger move in the higher term time frames was to the downside. We're using this 15-minute chart, but you can really use this strategy with any time frame. Just be sure that you understand that the higher term time frames are going to take longer to develop in terms of this particular strategy, and you can still go down the time frames and pick out the areas of interest in terms of higher volume candles. Now, in this case, we saw this nice volume candle right here at about this was around 5:30. So this was right after this was Sunday's candle. This would be, yeah, so Sunday's candle started right back here. We had Saturday into Sunday right around here. So we were trading at about 26,550. We came down, we filled that CME gap, and we saw some nice volume after really seeing no volume over the weekend. Then we saw a rejection up here around some resistance, and we could see that there was a nice high volume candle that came in on the high. So we had a low on higher volume, and we had a high. Now, these are marked in teal because this is a mean reversion play, and we already have our basically your support and resistance lines drawn out from the move down. And in this case, we did see a little bit of a deviation right into an area of resistance there at around 26,800, just shy of 26,800, about $13 shy there at 26,787. We found a little bit of support, swung up again, and you see that once that area was closed above, the next big area to look out for was around 26,900. In fact, it was 26,909. Once we saw that closure above there, expansion up, nice big high volume candle right here. This was the highest volume that we had seen in quite a while, so that got marked, and we saw another high volume spike up here. So a nice high volume candle here. And that defined this range for a little while today. Now, this was early goings. This was about 3:30 in the morning my time. And for some of you guys in there, you did note that I was awake and chatting with some of you guys. Now, in this case, once this area broke, I got alerts because this is all alerted. In fact, I guess it's down here, but these are alerted as well. I have those turned off right now. Now, in this case, we can see that this higher volume candle was defining this little bit of a low. We got another move up, and then we saw a lot of volume come in at this high, got swung a few times, came down, found support where on this high volume candle right here, right on the wick. and this was defining a bit of a range. So when this broke down, easy short right back to the areas of support here. You could see that it closed right on that 26,909, back tested a little bit, and then came down right to where we saw this range prior to the breakout developing. Now we can see that this area is still being tested. Got my little teal horizontal trend line there. We did see very high volume on this low, and you're probably thinking like, whoa, why don't you mark this one with a teal line? Well, because it's right in this, in between this white wick low from the original move down after tapping on the weekly overhead at 28,200 or so. And, it found support in there and right around an area that I already have mapped out. So there's no need to clutter the chart any further. It's already cluttered enough. And in this case, I could see price continuing down a little bit more, but this is a very high volume candle. In fact, this is, let's get some context. Let's go ahead and zoom out a bit here and just take a look at the volume down here. This is the highest volume that we have seen since the actual low, in terms of this being a bear candle. Now, there was a little bit higher volume. This was the rejection up here, right around that area of resistance, right around, guess what, where we are currently seeing Bitcoin try to find support. So there was nice high volume over here. And of course, this is all predicated on being right around some of these breakdown candles. So this is basically some of the highest volume we've seen. I wouldn't be surprised if this does set a low here. Now, the other flip side of that is if we do see a lower volume candle break below it and close below it, then I'd be looking for continuation a little bit further down into this area of support. This being relatively high volume, you can see it has already swung the low. This low is coming in at 673.81. We have seen a swing of that low at 26.6. Well, there it goes. Now it's breaking down. So now I would expect it to come, test structurally this area. It's already testing this wick, but if it does close below this wick and the white support here, then I would expect it to come down and test this area down here around 26,572, and then possibly down here to this white line at 26,465, and maybe even this low over here again. Now, this move got started to the upside before New York market session opened, so I'm not very surprised that this has retraced a bit. And this was I know that a lot of this move up originally was, there was a lot of people shorting around this 26,800 area, and then they just got blown out to the upside. And, even this little area up here where, things started to slow down, we had about half an hour of sideways, maybe a little bit more, about 45 minutes of sideways after the close. So you could total that up to an hour, and then just a little extra move up. And now we see, structurally we saw a lower high, breaks below this high volume candle, kind of defining that range, and then the move down. Now this is, a lot of longs came into the market pretty early in the morning here. As you can see, open interest here on the hourly was headed up quite a bit. It was making lower lows and then just made a higher high. And you can see that price was following along with the lower lows here on the hourly, building up divergence, and then took out the highs and went right into a very important area that we're going to jump right into now on the Bitcoin in 60 seconds chart here. This is, in yesterday's video that I uploaded for today, the Bitcoin in 60 seconds video, I noted that we are seeing compression on the Bollinger Bands, and that we had not seen a high put in yet. This was a red candle when I had recorded that, as it was the downside move to around this 26, 300, 400 area, and the high would be set in on any closes below this guy over here, as it stood right then and still right now. In this case, around 26,227, or give or take, you can just call it 26,200. Below there, the highest set, I'd be targeting the basis to the weekly, and that's really 26,100 to 26K down here. And below there, I would keep an eye on the lower first around 25.5 to 25.6. Yes, the lower first is currently 25.650, but structurally speaking, you want to see 25.5 to 25.6 hold up. And below there, I would target, right back to lows around the lower second standard deviation of the Bollinger Bands into this daily support that we already saw that wick come into. That was this, close open right above. It pretty much played out exactly as described. And I do think if we were to see a move back down, probably an initial bounce from that area yet again, around 25.2 to 24.8. Otherwise, I'd be looking for closures below to get expansion on any kind of breakdown of that 24.8 region down to the 24,300, 24,500 area. Then that does open up the next targets down here, 23.7 to 24K. And the monthly there is the line in the sand at 23.3, as many of you already know. Now, if we do see this 26,750 closed above, specifically a close, then I would be looking for, another run to the upper second here at 27K, to the monthly here at 27,200, with wicks coming in to around that 27.5. So I do consider this move up that was called out in the Bitcoin in 60 seconds video target fulfilled right now. So this move up is a fulfilled move. Now we need to see follow through on closures above the upper second that can break through that monthly at 27.2, and that's going to be 27K, recover 27.2, and then track expansion of the upper second standard deviation if we didn't just see a close above 27.5 here. But the setup right now is really, it's more of a setup for initial rejection, and this is normal. Even if it's going to be bullish and you're super bearish, just know that this is a normal rejection at overhead resistance. This is not anything too crazy, and I wouldn't be surprised if things continued to move back up after a pullback like this. But if you're super bearish, be aware that it could set a higher low. And the higher low statistics for being above, the basis band of the Bollinger Bands right now can come all the way down to that lower first standard deviation at 25.5, 25.6, get everybody really bearish. And even, well, this would adjust in real time. So I would say that, if you're bearish on a move back to the lower second, you're going to make a lot of money, right? But in this case, I'd be watching out for possible higher lows in relation to this last lower low. Because right now what we have is Bitcoin trying to change its structure on the daily as we've had, a downtrend. And this would be a downtrend continuation. So, but the way the Bollinger Bands are setting up right now are going to give the bulls an opportunity to possibly get continuation from here in the next few candles and or come down and set a higher low. So be aware of that. And if it does fall apart, it's going to fall apart in a pretty nasty way, just so you know. They're bulls. If you are bullish, just be aware this would just still be in trend. Yes, it took out the last lower high, so we do have a trend break. We got the downtrending structure, lower highs, lower lows. We have the trend break above this last high at around 26,440. And it's 26,460 actually, because it was the bear wick high here. And, what bulls are looking for is a higher low. And if they don't get it, it's going to be back to the lows, threatening to make another lower low. This would still be, on higher term time frames than the daily, just a continuation of a downtrend. So be aware of that. Now, I'm not totally bearish on this move. And in fact, the bulls have the rest of today, of course, to dig themselves out of this hole that they've created for themselves on this move up. And the pretty ugly looking reversal setup here on the 4-hour. Now, this is going to put in a high. It's probably going to come on divergence as well. Nope, it was higher highs. It's actually fine. There technically is divergence, but it's so long tail, it's not part of this current move, part of this current trend. This was part of a downtrend. This last high up here. Let's go ahead and get rid of. Let's get rid of all this fun stuff here. And I'm going to explain a little bit about these divergences because, the way that you often read it in books or the way that you see a lot of educators on YouTube and all these people who have these different groups and all these gurus explain it, they'll be like, oh, look, there's this bearish divergence. Technically it's not bearish divergence anyway, but if this was a higher high on RSI than this guy over here, they would be explaining it. Oh, well, you've got your bearish divergence. It's, lower high, higher high on RSI. And it's just trend continuation. It's not a regular bearish divergence, but a hidden bearish divergence. What I will tell you is, because this was a downtrend and this is an uptrend, you want to see in-trend bearish divergences like what we already saw that was kind of holding price down. So this is a nice little breakout. You want to see more in-trend bearish divergence in order to really look for a longer-term reversal, unless it just nukes past this most recent support at around 26,200. That's the criteria that I laid out in the Bitcoin in 60 seconds video. That is where a high on the daily would be put in. And the daily is going to be an interesting one because I believe that the daily is right on the edge of, it would depend on where today closed, but it would be right on the edge of throwing a regular bear div. So that's where you would see a regular bearish divergence, is on any high put in. As it stands right now, this is a higher high on RSI. I'm still of the opinion that I wouldn't be looking for new lower lows just yet on this current range. I would want to see some more. This looks like a pretty strong low, just from the look of the candles as it stands right now. Bitcoin has a lot to do in terms of digging itself out in terms of momentum. And in this case, the momentum pivot is at $26,000. That's likely going to move up to somewhere around 26,200 at today's close, maybe even higher, around 26,500. So we'll have to keep an eye on this. So the momentum pivot, this is a free Stoke momentum indicator. You can get it. It's the BA reverse Stoke panel by Trader Hali. And it has just the number for the pivot there. There's some paid versions from app.crontrading.net. They have a bunch of bells and whistles and are really good too. And I think that's kind of the only few that have the actual momentum pivot. And it is a regular Stoke, not a Stoke RSI. All right, so let's go ahead through some of the lower term timeframes right now, and I'll show you the outlook here. 12 hours getting ready to turn, has an initial cross down. $27,080 is the number to beat to keep that turn to the upside. 8 hour is headed down on any closures below 27,035 bucks. We've got 26,836 on the 6 hour. We have 26,800 on the 4 hour. There's like singing going on in my neighborhood, but it's not like this is like an actual person singing. Interesting. 27,160 on the 3 hour. So getting a little bit further away from price action here. 27,273 on the 2 hour, and the hourly we're looking at down below 27,331. So bears have the ball in their court right now if they want to push things down further. What's the 30-minute looking like? 27,218. This can flip around pretty quickly though if Bitcoin puts in a low on the 15-minute here. 26,742. And so this could flip around pretty quickly if we do see a low put in. As you'll note, that last 15-minute candle that we were talking about, we don't have the horizontals on here, but you can see that it closed above this higher volume wick low. If it does close below, that's where I'm looking for a little bit more downside, probably somewhere in the 26,500 to, maybe even 26,400 area down here. And if it loses that low, well, then we're looking at the next big area to the downside, which is, again, at 26,200. It goes to show you how important that higher term time frame pivot is going to be if Bitcoin continues to break through some of these levels. But as it stands right now, they have a chance. The bulls have a chance, is kind of what I'm saying there. I wouldn't be too concerned about this move until we see 26,200 break down. Then we're just looking for some areas that could potentially hold up as higher lows. And this is where we can get into some of the higher term time frame stuff. Let's go ahead and turn bull bands on. As you know, on the daily, you'll see that this is not an unexpected rejective area. Obviously, it's, right in a pretty big overhead resistance area. We had the upper second standard deviation, the monthly, and some daily resistances up here, which, by the way, this was a 15-minute breakdown. We had a bounce at that daily support. Let me just show you this real quick. All the way back when this move really got rolling to the downside originally, the 27,400 to 500 area is where we did see an attempted bounce there right at that daily support. So we had an initial spike down here to 27,671. Kind of tracked sideways, got a higher low, immediately got a lower high, broke down below this low here, and then went and retested these lows, hit this low, and it did break down and close below, and it tried to track sideways and hold, but this was a major level, and that's 27,489, and it did put in, it tried valiantly to hold sideways for another 2 15-minute candles before just nuking to the downside. And then, of course, we saw it hit liquidity, and you can see there's a wick from the actual original dump off low before getting a little bit of a lower low in this range. So this was a response to hit. It was a response from hitting liquidity, and then it took out all the breakdown shorts to the upside here. And then, of course, formed a short-term range and just went sideways. So big area of resistance there at that monthly. So let's go ahead and look at some of the higher term time frames. We'll follow up with the 2 days. I think that is closing today, and that is it just opened today. And you'll note that where Bitcoin is on the Bollinger Bands, it had previously found resistance at the basis band, and then we get a nice spike up towards that upper first standard deviation, which is around 27,775, and it is lower than this wick high up here, which still needs to be recovered for Bitcoin to really go and retest, 29K to around 30,000, 30,200, 300 area. Above there, Bitcoin's clear sailing to the highs again, I think. Now, if Bitcoin can close the next 2-day candle above the basis at around 26,615, then I would be targeting that upper first again, somewhere around the current wick high to this wick high over here, somewhere in the 27.5 to that 27.7, 28K weekly above there, where this wick got rejected in between the weekly and daily overhead resistances there at 28K to 28.4 to 6. And if it does close back below the basis, I would keep an eye on, this area right here. Oh, go figure, it's 26,200. And if we did see a move back down, I'd be looking somewhere around, guess where? The lower first, around 25.5. So if it does break down below there, I'm looking for a run to the lows in that daily support at 25.2 to 24.8. If that is lost, we start targeting the lower second. And that's coming in at that weekly that I talked about right at the beginning of the stream here when looking at the Bitcoin in 60 seconds chart at that 24,300 area. Now, the 2-day chart in terms of momentum, we can see that momentum pivot is at 25,485. So again, that 25.5 is where you want to see a higher low put in if Bitcoin does break back to the downside below $26,000 or so. And we can see that the 3-day is going to be closing today We haven't quite reached the basis yet, but we got that 3-day closure above the lower first. This came in on Friday. We did talk about this one. So it closed that day. It did break above the most recent doji wick high, tested higher, and it's got today to close. And this is still a viable target to the downside at the lower first. Again, where's that coming in? 25,900, call it 26K. Start seeing closures below there. We're looking back to the lows again. If we do see the basis recovered, again, this is at 27,550 or so. Then I'm looking to the wick high around that weekly resistance at 28,000, 4 to 6 area. So you can kind of see how what the interplay is with what I talk about in those shorts videos. And in this case, 25,650 is the number to maintain an upside posture on the Stoke. The 4-day, we had the 4-day, the 3-day, 4-day. No, I'm sorry. It was the 4-day, 5-day, and weekly all closing at the same time. Obviously, the weekly closing on Sunday. The 4-day and 5-day closed with it. The 4-day is pointed up, and it's going to remain with upside on any closures above 25,431. And we can see that it did recover the lower first standard deviation. Now, recovering the lower first standard deviation gives you a generalized target around the basis band, and this coming in at around 28,100. And if it does lose that lower first standard deviation again at 26,275, again, there's that 26,2 area again. If we do see closures below there, then it brings back into play the lows here on a close at first, and that's coming in around 25,800 to the wick lows and the lower second. Of course, that wick low coming in at around 24,900, lower second standard deviation coming in at 24,500. And of course, above the basis, we're targeting the lows up here around $29,000 to the highs by the upper first at 30,000 at 30,300 or so as a generalized area from the 4-day perspective. Now the 5-day is and got its initial cross to the upside. So it did meet the criteria to cross. Its momentum pivot is fairly close. We need to see the subsequent 5-day closure, meaning that would be this Friday. We need to see it close above 25,820, and we should see this momentum pivot move down further. And in this case, we can see 5-day did also recover the lower first standard deviation. We can see that in the early trading of today's candle. We have the lower first already tested, and it tested up. Now the lower first is sitting at 26,420. Nice. If we do see that broken down, then we start targeting again 25,800 to the lows. Lower second is sitting at 24,500. And the basis band is at 28,277. So 28.3 or so. It is above the wick high of this failed move up at around 28,184. So if it did recover that area, that's where that larger zone from the Bitcoin in 60 seconds video comes into play. And that's this weekly at 28K to the daily just above at 28,426. That is where I get that target from. Now you can kind of see what goes into those Bitcoin in 60 seconds videos. I actually sit down and I take a look at all the momentum pivots, all of our support and resistance. Where are the bands on the different time frames? What would expansion look like? Where's BBWP at? Like all this other stuff. And then I sit down and I record those daily Bitcoin in 60 seconds videos. And a little hint. Now you should not take and the reason why I don't say this in those videos, but when I'm giving targets to the upside or downside, that's probably my bias. So like last video, I was targeting the weekly overhead at 26, the upper first to the weekly at 26,550. When I recorded that to 26,750 above there, I'm looking for 27K to the monthly at 27.2 with wicks coming in around that 27.5 area. That's because that's my bias. That's what I was seeing. The low was already set prior to me recording that on that 15-minute on high volume. So that's where that comes from. Now, I'm not always going to be right. So don't take that as, oh, well, Landy's bullish because he read out the upside targets before the downside ones. Well, I did point something out for right at the very beginning. Like if you see price down around 26,200, it's probably going to head down first, right? So, when I had mentioned that the high is not in yet on the daily, and it still isn't. So we have to go with what we have in front of us. Now, the weekly, we saw again a lower first standard deviation reclaim. That gives us the generalized target of the basis, which again, right now it's at 27,800 or so. So you got that, breakout above that daily area at 27.5. We're probably looking at, 27,800 to that weekly at 28K. And once in there, that's when you start looking at possibly moving up to 28.4 to 6. And why is that? Above the basis, we can see the upper first is at 29.5, it's at 29.6 or so. Now above there, that's where we start looking to the highs again and possibly higher. In this case, the upper second standard deviation is at 31,381. So it is below the high at 31.8 there, but we would start to see expansion, slight expansion above the upper first standard deviation if we did see closures above there. And that would start to move that upper second standard deviation to the upside. Now, this is all hypothetical as Bitcoin is still trading below the basis on the weekly. And if it does lose the lower first standard deviation, which is at 26,134, then of course we're looking to the lows on the weekly, 25,800 and lower. From the daily perspective, we would want to see the weekly close above 25,800. Otherwise, we've got a lower high in this case, and a trend. So lower low, lower high, probably targeting that lower second in that case. And that again is coming in at that weekly down there at 24,300. So that weekly is this area over here, by the way. You just look at the tops of these closes, 24,281, and then we've got 24,316 right there by the lower second standard deviation. And I kind of give it a little bit of a range because of some of the other time frames. So 24,300 to 500. If it does get front run, it's kind of a zone of interest. Below there, you're looking at 23.7 to 24K and so on and so forth. So yeah, that's Bitcoin. The momentum pivot for the weekly has dropped significantly, and you can see that we went and tested it. 27,316 is now the new momentum pivot. So even if Bitcoin can hold up and survive through the rest of this week into next week, especially above that 5-day momentum pivot at around, 25,820, and then that bleeds into the weekly and we see an initial cross on the weekly or something, or it comes down and then we're looking at next week into the end of the month as being the initial cross on the weekly, then we're likely looking at Bitcoin getting a wider move up. This probably becomes a major low. And, we at minimum are probably targeting somewhere back around the highs, $30,000, maybe above there, mid $30,000 to the highs at 31.8 or so. I wouldn't necessarily be looking for, a moonshot, but above 31.8, the monthly overhead resistances are going to come into play. And that is going to be the weekly and monthlies up here. This is a long ways away. Obviously, this is all hypothetical only if we were to break these highs and especially get through that daily resistance at 32.4. We had that nice dip in there at 31.8 to 32.4, hit 31.8 something, 31.8 and 31.862. 31,784 was what's marked as the daily, weekly, monthly resistance area. After breaking out above there, I think it takes probably a pit stop if it doesn't get rejected and close back below at the daily at 32.4. But I'd be looking for, $35,000, which is a monthly and a weekly area. Big closures up there from 2021 into 2022. So, all right, that's going to be Bitcoin for today. Let me throw it over to the chats real quick here. Does anybody have any questions? You want me to explain anything? Do you have anything to add? Go ahead and let me know. Let me peruse the chat here. So hi Bobby, hi No Name, hi Cheryl, hi JR, hi Spin, how you doing? All right, so that's let's see, not too much here. A little bit of pre-stream chat was going on there. It's National Cheeseburger Day. Thought Dixie would have went further down. Yeah, Dixie's pretty strong right now. Spin, everybody saying hi. That low stopped you out. You must be referring to the low around the 20. The low of today, basically around 26,382. Probably went lower on some exchanges. Spot trading on Sol, hoping 25.5 is the new low. I mean, we'll see. It's a little far away from there, but it doesn't mean it can't get there. Looking to re-add on your current long position. If it develops that way, this is a sideways market, transitionary on the longer term time frames. I know that there's a lot of people talking about this monthly here. It's like, all right, broke down. It's a lower low on the monthly. The high's in. It's over. Look, I mean, being below the basis band does favor moves back to the lower first, just straight up. And that's coming in at 19,140. And that is below this last wick low. So if Bitcoin were to head there, I wouldn't be surprised to see wicks in and around the bottom side here. If we saw closures below there, then we're probably looking at that 12K number down by the lower second. Then it's new lower lows. This last major low would be violated, and it's going to be a long way. It's going to be a long time to wait for a newer macro bull run. This has been a very nice move up. I would not be surprised if things just went sideways here for a while. I also would not be surprised trading back around the basis if Bitcoin were to then go take out the highs and try that upper first, which just so happens to be at around $35,000. And I just pointed that out. That is a weekly area at 34,700 or so. And then, of course, there's the monthly up here at, at $35,060, just above that upper first. And that is the area that I was just referring to over here. That is 34,760. And then the monthly just above it at 35,060. So I would not be surprised. Now, of course, Bitcoin's got to get through this area. It's got to get above the breakdown candle at 31.8. And maybe even you want to take that wick high and just call it $32,000 just below it by like $40 or so. But it looks, this is what you expect to see is we got lower low. We want to see a higher low, and then go. And the higher low can come within this consolidation, and we're not going to know until we see a breakout or a breakdown. So that's going to be Bitcoin for today. Now we will talk a little bit more about the monthly as we get in towards the end of the month. And we can go ahead and I can let you know the pivot 22,230, and we will have a quarterly coming up, and that's at 31,350 or so, 340. Actually, let's go ahead and look at index just to make sure that that's correct. 31,322. So, quarterly, if you do see a closure below 24,770, quarterly is probably looking like a basis tap, and that's coming in at like $23,000. Of course, that's right around that monthly that I call out to the downside, 23.3. If we saw closures below there on the monthly time frame, then I'm looking much further down at supports further down. But this is going to close at the end of the month. Of course, we'll have the monthly. We will have to wait on the 2 month, and then you got other time frames that are going to be interesting as well. Right after the monthly and quarterly, in the 4 week, the 3 week, and the 2 weeks going to be closing with this week's candle. Now the weekly and 2 week in terms of their momentum pivots, the weekly still headed down, and the 2 weeks still headed down 30,730 or so. If this can remain in the strong half, or basically above the 50 read, and this weekly resets, Bitcoin puts in a major low here again, that would be pretty indicative that those most recent highs on these longer term time frames are probably going to get retested, at least the bottom side of the consolidations. So, all right, let's go ahead and take a look at traditional markets. Dow is trying to climb its way out after a oh look, yep, magical trend lines, right? I don't really use the trend lines, but it was a request from somebody else, so I just left it on there. Basis band tap, high is in. This is a lower high. Yes, this is all a consolidation. You can draw all kinds of fancy patterns. It's a symmetrical triangle. There's a breakout coming soon. Well, guess what else you can use to determine that? BBWP. It's 0/2. Well, that would be under 2 in this case. So let's go ahead and take a look at BBWP so that we can follow up with how to read this. Oh, this is very low volatility. A larger move is going to begin very soon. How can we determine which way that move is going to go? Well, we'll get a little bit of a hint as Dow pulls away from the basis band. When it does, if it pulls away to the upside and starts to close above the upper first, we will see this number move up, that being the BBWP number. Now, if you're using my indicator here, the red means that the BBWP is underneath the moving average. When it's green, all it means is that it's above the moving average. And in this case, a move back above the upper first here at 34,787, 34.8 or so, I would be looking for a move back to the upper second. Now, if we did see closures above 35,000 on Dow, I'd be looking for aggressive upside expansion of BBWP. Dow likes to, poke at it a few times and then move through it and then kind of track along with it. So just be aware of that. And same goes for the downside. We need to see closures below the basis, which is currently at 34. Let me move my creaky microphone stand here. 34.5. Excuse me, 34,587, 34,590. Sorry about coughing in your ears. Below there, I'm looking to the lower first. Yes, there is a support rate around there as well, 34,464. But realistically, we wouldn't start seeing more aggressive expansion until we saw closures below the lower first. And if it does close below that low, we're looking to the lower second. Lower first is right around 34. We'll call it 34.4. We'll split the difference between the support and the lower first. We see closures below around 34.4. That also closed below that wick low at 34.3. Then I'm looking to the lower second around this low. Obviously, you can see how this plays with support and resistance, right? Lower second standard deviations at 34,186. Closures below there, we're looking to that wick low. Once that's lost, we're looking for expansion to the downside. So pretty easy setup. We have kind of a neutral look in my opinion. Yes, there's an initial cross down on stoke momentum. But you're going to see this when things are kind of coiling up like this. So there is a larger move coming. Be aware, it's probably going to start. It's probably going to start this week, to be honest with you. And if it doesn't, it's definitely starting next week. I highly doubt that this is just going to track sideways. But, I could be wrong. What's the bias on the weekly? It's probably down. And it is. Now, again, this is looking fine on the weekly. It's above the basis band. For those of you that may not know what the basis band is, that is a 20 simple moving average. And then the standard deviations are the first, second, and third to the upside and the downside here. So the basis is coming in around 334. Lose that, we're probably looking at expansion on the daily to the downside. And from the weekly perspective, I'd be targeting around the lower first. Wherever that were to come in, somewhere around these opens at 33, opens and closes across here around 33,700 to 800 to that lower first, which is coming in basically at 33,700. That's where I would be looking first and then come back to it later. As it stands right now, it's a Monday. We'll see what happens. It's kind of, painting a doji here. We've got about 40 minutes to close, so we'll see what this ends the day like. Let's look at NASDAQ. NASDAQ lost its all-important trend line. It's the trend line to rule them all. It's down only, guys. No, in fact, I'm not too enamored with this from that perspective. But what I will tell you is losing the basis band is not what you want to see for a move to the upside, obviously. But I mean, it is losing this last low. If it does close below 15,138, then I'm favoring a move down to the lower first here. Of course, there's some candle closures around here at 15,035. Below there, we would start to see expansion again. Again, this is BBWP. Volatility is very, very low. If we saw a move down to the lower first that then closes below, we would see that start to move up. And I'd be looking to this support area down here, 14,900, with the lower second coming in at 14,800. Any closures below there, and especially below 14,700, I'm looking back towards the lows again at 14,600. Closures below there would just be further expansion of the Bollinger Bands to the downside. And to the upside, above this last closing high, not the wick, is where the upper first is, and that's 15,466. Need to see 15,500 taken out to the upside. Then we're targeting around this next high up here at 15,600 to the upper second at around 15,700, give or take a few points there. And downside angled on Stoke below 15,478. So that is going to be right around that upper first standard deviation anyway. So reclaim of that would set a low as well if this closes like this today. A little bit of an inverted bull hammer here if it does close like this, of course. In this case, I don't really have an opinion. The board is still being set for the week here. And realistically, from the weekly, it's pretty far above its basis still. Its basis is right there at 14,900. If it were to lose that, we're looking down to the lows again. Like I said, if it loses those, we're looking to the lower first at around 14,400. And yeah, that comes right around that 14,300 close there on the weekly. And realistically, the next big area is going to be this wick high at around 13,700 to the closes at 13,5 to 6. To the upside, like I said, 15,5, and I do think things start looking a little better for the bulls in NASDAQ. So let's go ahead and take a look at SPY. SPY swung the low again. We're getting some choppy sideways price action, something that we had previously talked about. The lower first is coming right into these close open candles. Excuse me, kind of splitting the difference there at 440, 441 or so. If we see closures below there, looking to the lower second around this close at 436, 437. Below there, we're looking for expansion back to around 430 to 432. Of course, if it loses that, we're looking for aggressive expansion to the downside. To the upside, basis recovery is going to come on any closures above 445. I do need to see more than a gap fill here, which would be that 449 area. Need to see closures above there to be bullish at around 450, and especially taking out this last high at 451.08 to go test 452 to 453 by the upper second. Above there, I'm looking for expansion back to the most recent high at around 460 and beyond. Weekly, daily is going to be down below 450 anyway. So, it's likely more consolidation if it doesn't break down from here. The basis, again, is right there at, for the weekly in this case, is right there at 438. So 438, 440. Yeah, so not anything too crazy here. If we do see a reclaim of the upper first, which is again coming in at 450, that daily would turn as well, or it would already be turned. And any closures above there need to see close above 452 to go test the upper second area by the highs at 460 or so, maybe 465. Back below the basis to the low there, and especially losing around 430, we're looking to a run down to around 425, 426 by the lower first. And below there, it's basically the lower second area kind of has a zone to the closes over here. There's a few closes around 415 to 412. If that's lost, we're looking at weekly expansion to the downside. Likely, though, unless it's just going to grind its way down, likely would get snapped back up, put in a low. But that would also track with a structure change, which is, we would have a, higher low still, but then it would be a lower high, lower low structure if it does break down, and especially close anywhere below this last low. So keep that in mind. Weekly is going to be pointed down on any closures below 448. So any closures back above 449, it's a little bit more aggressive to the downside on the daily. Then we start looking back to those highs, likely to turn the weekly back to the north side there, at least initially, and then we come back to it. So that's going to be traditional markets. Let's go look at Dixie. Dixie has been the bane of traders for the past, couple weeks, right? It's all Dixie's fault. It's actually not, but we have a bit of a reversal set up, but we've already seen this with Dixie a few times, and I've told you guys that the way that I'm looking at Dixie is it's still very likely above the upper first that it goes and tags this zone, and maybe even higher at the deep 105 area, around 105.70 to 105.80 and above, maybe into the low 106s. Now, if it does lose the upper first and close above there, we still have to watch out for, we had a evening star to morning star reversals going on here on Dixie, looking very, very strong. Now, if it does, and I also mentioned I want to see multiple drives of hidden bearish divergence, or not hidden bearish divergence, regular bearish divergence, sorry, along with longer term time frame hidden bearish divergence. But there is the possibility it's building. If it does put in a high here, this would be our second drive of bearish divergence on Dixie. It is below the moving average for right now, but I'm not really, seeing too much. Dixie's pretty strong on some of the other time frames above the daily. So we'll take a little bit more of an in-depth look today at Dixie to start the week. Now the upper first is just below this support area at 105.09. It's coming in basically at 105. We see 105 dropped and or a closure below Friday's wick low at 105.08. Then we're looking at a high being set in that would produce another drive of regular bearish divergence or in trend bearish divergence. In this case, higher highs on price action, lower highs on RSI. Now, I would still be targeting, right back to, this is 104.69. I'm just reading numbers here. Nice. And then back to the actual lows at 104.50 on a close, maybe even that wick coming into that basis area around 104.30 to 104.35 or so. If we did see closures below there and this last low, then we have a structure break. And then we're looking for lower highs on the other side. Doesn't matter how far down it goes, we're looking for lower highs on the other side for that daily to start shifting trend. And likely, I'm going to show you something on the monthly that might be a little upsetting to bullish people or I should say to the Dixie perma bears. Because Dixie can rise and markets can rise at the same time. It's not a tick for tick. It is an overall market structure on the higher term time frame look that matters. And in this case, still a daily uptrend. Closures below 104.93 will keep Stoke turned to the downside here. It's currently closures above 104.93 turn Stoke initially back to the upside. Stoke is literally just chasing right on top of price right now, close over close. So we have to see momentum weaken. We got to see a lower. You either need to see a consolidation on the highs that go sideways, or we need to see a lower low, lower high to really start looking for any kind of reversals here. And in this case, it's trading at 105.14, so it's going to keep Stoke elevated on the daily. 2-day is still going to be facing up on any closures above 105.09, sorry. And again, 105.09 is the wick low from Friday. So closures below there would put in a high on the daily and start to turn the 2-day Stoke to the downside. Still riding up against that upper second area, a little bit of sideways here on the previous 3-day candle. Current 3-day candle is going to close today. And we are going to see the upper second start to move just a little bit north of our overhead resistance here from this last high of this, a little bit of a consolidation with a deviation to the downside of a pretty major support. So I wouldn't be surprised to see this area tested at around, the upper 105s to low 106s initially, maybe even more. I might be underestimating that, but I do think if it got really aggressive on lower term timeframes, it's likely to turn into a wick. 104.89 is going to be the momentum pivot. This is going to chase price action here on a close, likely be right on top of it at close today. 4-day still upside angled above 104.24, so this has got some room to go. Again, that upper seconds right there in that overhead resistance, so keep that in mind. That's one of the reasons why I'm saying that I do think price is capped, or if it trades above on like a daily, it turns into a wick. Maybe it turns into a higher high break structure on the daily, and then that starts to find support on these longer term time frames. But as it stands right now, upper second is on the 5-day, same area. Momentum pivot is going to be 103.76. So this has still got room to hang on the highs and try higher. Weekly, again, upper second, right in that resistance. I know I sound like a broken record, but that is the main resistance. It's taken a while for the Bollinger Bands to line up with that overhead resistance, but the call above the 104.69 region, pretty accurate to go test these areas. 103.76 on the weekly is going to be the same as the 5-day. So now a little bit more concerning for the bulls is the end of the month is coming up. And 104.31 is the number to beat to turn this to the upside for the monthly. Saving grace, quarterly, ready to turn down. Monthly and quarterly close at the same time. The monthly would just be an initial cross to the upside at 104.31. And we would also see an initial cross. Well, it's kind of crossed, so we'd have to look at the quarterly and see what this momentum pivot ends up being. I believe it's going to be around the highs. It's currently at 110. So this is going to be fourth quarter, open of fourth quarter. We will take a look at this. And this is going to be an important one because pressure down on the quarterly is no joke. The monthly can even chop sideways, and quarterly is going to, it would be an initial cross, by the way. So it could just fake out. Monthly turns to the upside. Then quarterly gets an initial cross down and then crosses right back up before both the K and the D can shift there. But, it's looking like on the quarterly tests of around 108 to 110 around its current pivot, would be not uncharacteristic. Of course, that would also set a structural, higher low on the quarterly above 105.88 over here. So just keep that in mind. Otherwise, that basis at 98.51 is still fair game. Upper first here is at 103.69. Nice. Always coming up with the 69s here. But yeah, so being above that upper first favors testing these wicks, and the upper second, which is currently at 108.86. So I wouldn't be surprised if Dixie holds up well through the end of this month, that quarterly does update and we see that area possibly get tapped, and still see an initial cross to the downside on the quarterly. I would not be surprised. We'll see what the back half of September looks like, but that's going to be Dixie for you. A little bit of a longer look at Dixie here. Now we're going to finish up with gold. Now gold did hold the areas that we talked about, right? Friday we talked about, oh, look at this, nice reversal. We need to see closures above 1930. She's 130. 1930. If it was 130, you better go buy some gold, right? 1930.69. Again, meme numbers everywhere. Closures above there, and I'm looking for a move to the upper first. We've kind of already seen that at 1934, 1934. And if we do see closures above there, I'm looking at the bottom side of the high at around 1940 to the upper second around 1945-46 area. If we do see the 1952 high taken out, then I'm looking for another run, around 1955 to 1960, possibly the highs over here at, around 1970, 1980. So keep that in mind. Gold looks good. This is a consolidation, though. We're starting to see contraction on the Bollinger Bands, and this is a nice higher low in relation to this last low. So gold looking pretty good right now. We're likely to see a momentum turn on Stoke as well. 19. Hold on one second. Lose my voice. Hold on. 1924 looking like the momentum pivot there for the daily in this case. And if we did see that turn up today, that's an initial cross to the upside. We need to see then Tuesday's candle close to confirm that. We're likely to see that pivot, though, transition down to the low side here. So, realistically above around 1920 right now, even 1910, I would say, which is the lower first. Looks fine. I wouldn't want to see 1910. I will just let you know above the basis is really, around that 1920 area, 1922 in this case, is where you want to see it hang out. But it does have, technically speaking, it does have room down to that lower first at this particular moment at 1910. Man, starting to fall apart here at the end. Weekly, weekly starting to turn as well. Low volatility. And lower first tap, need to see the basis reclaimed. 1940, again, we're coming up with the same numbers everywhere we look. 1952, above there, we're looking at the upper first, which is coming in just north of the close open here on the weekly at around that 1967, 1970 area. Then we're looking right back to the highs around the upper second there at 1987 to around 1993. Just reading dates now. All right, so that's gold. Gold looks, fine. Weekly's now pointed up. We got hidden bullish divergence on the go. 1891 is a momentum pivot. So gold looks pretty good on the weekly. Gold looks set up to try and follow through on the daily. So just keep an eye on it end of today into tomorrow's close. And then I do think, we might possibly see a major low put in on the weekly, and then we start looking for this downtrend to get broken. I mean, this would be higher low downtrend break if it was to close this weekly above 1952 at this wick high. So we have the downtrend, and then we'd have a higher low to downtrend break all in the same week. So that's what you'd want to look for if you're really bullish, and then kind of go from there. All right, so that is going to wrap up today's analysis. I actually am not going to take requests today. I know some of you might be interested in hearing about your favorite coin, but I legit am like losing my voice. But I will answer any questions related to the analysis that I just did. If you do have any, please go ahead and put them in the various chats. And we're going to turn the music up here. Let's go ahead and take a look here. Let's go back to Bitcoin. Let's turn on the magical lines that we have had on here for a little bit. Bitcoin trading back up towards 26.8, which was a pretty important pivot for some of those medium-term time frames. And let's messy up the screen. We'll turn on some music, and I'm going to read through some of these chats because there is quite a few and that we got going here. For some of you guys, I know that over there you're not really asking questions for the actual stream. You're asking questions for test-related stuff, right? Okay. Yeah, you can leave them in there. That's fine because I'll come back to that later when I talk to you guys. excuse me, just let me know which test you're studying for. Like, is it a series 24, series 57? And then we'll come back to it. Yeah, so make sure if you have a question to let me know which exam you're studying for. 24 or 57. Mm-hmm. Yeah. Okay, cool. Let me go ahead and get the music on here. We'll turn off the bull bands here. We'll just go straight candlesticks and volume, as it's working quite well. You guys can see that this low wick, nice high volume, is still holding up. Nice little reversal point. Closed back above 26,787 and got a little push up to the local range here. Now, if it can push above, targeting 26.9 to this kind of stopping point right here. Above there, we're probably looking at a retest of probably 27K, 27,100, 200 area. Go from there. Did the music not play? Could swear I turned it up. Here, we'll do this. Go ahead and turn up the music a little bit here. Okay, let me look over in YouTube chat here real quick. Oh God, too many screens. Where did I put YouTube chat? There you are, YouTube. All right. I see a lot of people in YouTube still. Not a lot of people chatting. Not like it usually is, at least when it gets popping off in here. Cheryl talking about, yep, okay. Already read some of that. Which NASDAQ on TradingView do I look at? I'm looking at NDX. So right now I'm looking at, for traditional markets, you can use futures if you want. I'm using the NASDAQ 100. And then you can also use NASDAQ 100 mini futures, but I'm concentrating on the market that is delayed. It'll have a D next to it. Obviously, futures has a D next to it as well, but this is NASDAQ. This is the 100. But I do check both. It's just not. We will see everything that's happening in futures, like the open today on the daily for NASDAQ, for instance. It opened lower and then moved up. That's because futures was trading lower. So, and I actually think that there's value in understanding that, where we could look in futures and be like, oh, okay, so wick down. But then when the market's open in New York, that's what I'm paying attention to. Hope that helps, Cheryl. It's a good question, by the way. Let me look here. Hello, Jedi. Yes, you're late. You can always scroll back, though. I would definitely pay attention to the beginning of the stream. I mean, Bitcoin's kind of doing exactly what we've been talking about for a very long time now. I think we got a pretty good handle on the market, but this is, I just kind of covered the move up, where the lows were set, and then where this most recent high was, what the breakdown looked like, the easy trade to the downside. It's right back to support, basically. This is just the easiest trading setup. Once it broke out, easy upside trade, and then once it broke down, easy downside trade. When you're evaluating it on lower term time frames, it's the same look. Beautiful scalp opportunities. That's really what it comes down to. So I broke that down and then got into how that relates to the higher term time frames, like the daily, so on and so forth. Even went through some of the lower term time frames as well. And then of course traditional markets, Dixie. We spent a little bit more time on Dixie as it is a Monday with a new weekly open. And then gold, which is looking okay right now. Looking like a good possible trade to the upside. Again, it still has to meet criteria. So SHIB was a bit of a heads up. I don't take altcoins as giving me a heads up to anything. Bitcoin gave us its own heads up by setting a higher volume low right after a gap fill on CME. Nice high volume low, came up, put in a higher volume high here, track sideways. Once it broke out, went on a run. Easy setup. Don't need alts to understand that one. Nice higher volume low, gap fill, swung all these lows, closed very strong, and it was the highest volume that we had seen since since Friday basically. And once it put in that higher volume high and tracked sideways, structure was already set. Once it broke out above it, bye-bye. Upside move. You know, we'd already previously talked about above 26.9 is probably going to run, you know, the area up top around 27.5 or so. You know, you can give or take. Didn't quite reach that, but it's retesting around, you know, 27K right now, or 26,900 rather. If it can reach back up there, which it's likely to do, nice little wash out to the downside, get rid of those longs up against resistance, and then we'll see if it's just going to be a transition to a downtrend on some of the higher term time frames, or if it's going to come right back into range up here. That's going to be the more interesting thing. You know, it is struggling around our magical lines here, but if it does push up above, probably gets a nice little pop up. Maybe even turns into a wick. We'll find out, right? 15 minutes headed up. Looks good. Got the Stoke cross. I want to see divergences, to be quite honest, but I'm not going to get too nitpicky right now, especially if it starts to turn the 30-minute and hourly. You know, is it against the 4-hour momentum? Yeah, but we're using volume to track some of this and understand the moves within the context of those higher term timeframes as well. Also note that if you throw on bull bands and you look at the 4-hour, this was a basis band tap after upside expansion. So just keep that in mind. Upside initial expansion, came down, tap on the basis. Yeah, does it put in a high and a close like this? Absolutely. 13 minutes to go. But I'm not too concerned about it. Okay, so Cheryl says, looking for the wrong NASDAQ, I think. Yep. Cool. Well, I hope it helps. I don't see too much resistance between 26.6 and 28.2. Is that what you see? No, I see tons of resistance between there, and it's just historical resistance, though. You gotta look pretty far back, but it all matters. You know, above, you know, basically 27K, you know, there's all kinds of resistance over here in the, you know, 27 to mid $27,000 area. The highs just above it at around 28K. I mean, there's all these lows, but it's recovered those lows. So the natural target is where Bitcoin just hit, which is around this high at like 27.4. Now above there might be what you're talking about, but then you do have a low over here. You know, I mean, maybe if there's a reclaim of 26.6, you know, which it is reclaimed, is it easier to move between those areas? Absolutely. But that's, you know, I wouldn't say that it's, let me just say, I understand what you meant, but I would just say that this is the zone or the block that you're in, not that there's not resistance. But I don't think that's what you meant necessarily. I don't know what I'm trying to say. Word salad. But I would tell you that there is a lot of resistance, and if it is broken above, that's where we start looking at a really good breakout. So 28.2, that's a breakout area. You know, if Bitcoin can close above it, not just swing it, not just get lower highs around it or wick highs above it and close inside the wicks. No, it can close above, you know, Bitcoin. I'll be quite honest. It's probably going to run to like 30K and probably even into the mid 30s. If we start seeing closures back above there, it's going to turn all those other time frames that we talked about up. So no, but you just take, you know, horizontal support and resistance combined with volatility metrics is really going to tell you everything you need to know. Wicking above the upper second, you typically wick above it, especially when you're in a bit of a compression phase. You got to see closures above to really start seeing that expansion, and then you just look in that wick and higher, and you get your natural areas 27.7 on the close. If we see closures above the daily to that weekly at 28K and above at 28.4 to 6, and then 29K, and then 29.4 to 5. Then the lower highs around 30K, 30,300 at the weekly, and then above there it's, you know, 30,500 to 800, 31K, 31.2, 31.5, 31.8, yada yada yada. So it just take the horizontal support and resistances are going to be your best friend, and then you take those just to mark your key areas where there are swings. That's your highs, your lows. Those are your swing fails, right? Swing fail to the upside, it's a high. Swing fail to the downside, it's a low. Right? So those become your key areas of SR, or your SR levels for your horizontals. And then you can incorporate volume. I like lower term time frame volume. And just because it makes it easier to trade. I can hold a position for a couple hours once I'm in a position instead of having to check the chart every 5 seconds. And then just alert the different areas of interest. You know, like when looking at the 15-minute, you know, I have an alert set here, had an alert set here, break above. Now I'm interested in this alert line. So if we break above, I'm ready for a move up, at least $100, $200, and then more. And then once this develops on the other side, you know, see a high put in, high volume, see it retested, probably out of my scalp by then. I'm giving you hypotheticals because I'm not going to tell you my trades, but you could probably figure out what my trades were based on what I've been talking about every stream. But in this case, you know, like on the other side, once this breaks down, it's alerted. On the lower term time frames, I usually alert, like I'll make this chart on like the 15-minute. You can use other time frames, higher term time frames, but then I alert the lower term time frames. You know, 5-minute, 1 minute are typically where my alerts are. So when it gets to that area of interest, I'm ready to do something. I don't use automated bots. I still manually trade, but we'll see. We'll see. Maybe I'll start using some API stuff. I just don't trust it with the exchanges that are currently being utilized within the cryptocurrency market. Let's just put it that way. You can see how powerful these volume-based candles are, right? This was a close open at 26,909. It's also right where we saw the 15-minute close before setting this little bit of a low, and that's typically going to work out that way. And to reiterate, it's you're deconstructing the order book by doing it this way, by the way. So no need to go buy expensive order book charts, charting software, order book software basically that has to pull APIs from shady exchanges. You can backtrack it through using Spot and then go look at your exchanges. So nice little consolidation breakdown, consolidation breakup, or breakout if you like. So that is going to do it for me today if nobody else has any questions. It's mostly for you guys in YouTube. It's most on the other side of these other chats. I mostly got questions about exam stuff. So, yes, Cheryl, always strive to learn something every day, myself included. There's peers of mine that do exactly this that I look to and learn a lot from as well. I mean, you can never have too many tools in the toolbox and skills that you can learn. But what you should always remember is no matter what you're learning about technical analysis, no matter how much you know, none of it matters if you don't have a trading plan. And the trading plan is just implementing what you are seeing on the charts, and defining the criteria for taking a trade. And you don't want to overdo it. Simple is better. The simpler, the better. Trend. I say this all the time. 4 keys to trading. Trend, support and resistance, and volatility drive momentum. And those are your 4 keys of trading. So a trend, you can use whatever you want. You can use moving averages. You can map the trend out visually, higher lows, higher highs, just with your eyes. You can mark it. And then support and resistance is historical. Prices traded. Areas where price, reversed, no matter what the time frame was, traded up or down. Typically, that's where you find your trend gets a high or a low, which is your swing fail pattern to the upside or downside. So it's all trend, support, resistance, and then volatility is how quickly price moves in one direction or the other, and that's where Bollinger Bands come into play, and BBWP comes into play, and that all is the driver of momentum. Your Stochastic momentum, your RSI momentum, your Chand momentum oscillators, your money flow indicator, all the momentum stuff. Because money flow indicators, by the way, unless they're actually looking and reading and pulling the API for the books, it's not what you think it is. It's a bunch of fancy math to give you an idea of money flow. But there's thousands and thousands and thousands of ways of doing technical analysis even, and even more opinions about those ways of doing analysis. Just make sure you have a plan. A good plan is understanding your risk. How much are you willing to lose on a trade? Does the trade make sense? What is your normal risk profile? Meaning, like, how much risk do I typically, what is my risk tolerance? Like, no matter what the trade is, what is that percentage? And then evaluating a trade setup for its risk to reward ratio. A lot of people from traditional markets go 1-to-1. I'll be honest with you, but 1.5 to 1. In crypto markets, I would typically aim for more around 2 to 1, 3 to 1 or more, depending on the trade, depending on the time frame. And depending on the trade, you should always have a plan for scalping versus swing trading. Swing trading is a long-term position building trade. Scalp is in and out very quickly. You're scalping to move up, you scalp it back down, done, out. Not holding that position. Maybe that'll inform me creating a new position with a swing trade. But other than that, in and out. Not going to build a trade. Just take profits at different levels. Keep your stop reasonable in accordance to your risk to reward ratio calculations, and then go from there. And a trading plan is simply just a checklist. Does trend up? Is volatility expanding to the upside? Did it break through overhead resistance? Is momentum pointing to the upside? Okay, I'm going to be long from here if that happens, and vice versa for shorts. So, and then defining that criteria. I typically like 3 main take profits and 1. So I split my positions into quarters typically. I usually have 3 main take profits. After the first or second take profit, I typically move my stop flat. Moving a stop flat is simply I'm getting questions on the other side, which is why I'm explaining this. Moving my stop flat is just bringing your stop equal with your entry. I will usually do that after either the first or the second take profit, depending on how tight the RR is, or the risk to reward is, on that particular trade. So I get 3 main take profits, and then I have one which I call the let it ride. That'd be the 4th take profit, and that is a trade that if I don't close it, I will leave a quarter of the position on after I've already banked 3 profits, or already taken profit 3 times rather, and then that could stay open for, you know, continuation past my take profit areas and the normal areas that I'd be looking in to take profit, so that I can profit more, or for any mean reversion plays if it's a long, for instance, that get a higher low. And then I can always rebuild that trade either into a swing position or another scalp. So it gives me options, or close it because stops are flat. I've already taken profits. I've already made money. I can walk away and just observe price action, and or build a trade, and or have it closed for me, and or just close it whenever I want. That's the way I structure it. It's not the way that everybody should. I have a very different risk profile than many of the people that I talk to about trading, right? And that's normal. You should have a different risk profile than me. And if you don't know how to do that stuff, well, we're going to be getting into that soon. So, risk management, how to structure your own checklist for your trading checklist, stuff like that. And there's a lot of people that teach you how to do this. You might even find some commonality with the way that I will talk about it with people who have also worked in the industry, let's say, or have been trading a long time, or learned through certification processes. So yes, for those of you guys that are new over there, you're going to learn it from your mentor. Yeah, you're not going to learn a lot of this stuff is nuanced from guys that are passing down their knowledge from within the industry. Yes. So you're going to learn it from your mentors. Even after you're going to learn the best practices on your exams. And while you're studying for your exams. Yeah. But, you know, sometimes it's not always the same in the real world. Just understand that. Cool. All right. I think that's going to do it for today. We went about an hour and a half today. I want to thank everybody for hanging out with me. Discord is still being tested. I ran into a roadblock there. Got some issues that we got to sort out, but it is on its way. It's being tested. Streaming and everything works just fine with the bot that we got in there, and there's hopefully it's gonna look like any other Discord, and you shouldn't look that much different. But when it is launched, I will definitely let you guys know. We do have some bugs to sort through though with the moderation stuff. For those of you that want to get in early, it's really, I don't have like any early access right now. It's literally the guys that are helping me build it out that are working on it. When it's done, it's just going to be open, and it will be free. Yes. Okay. Yeah, just trying to find a solution for uploading pictures. So just so you guys know, for anyone that's listening, there are ways to wallet drain people with JPEGs and other acceptable formats of uploading pictures to Discord. So just understand that what I'm trying to do is prevent that from happening. So that's one of the reasons why we got a bot that we're trying to get rolling here, and it seems to have trouble with some of that stuff. So I don't want an open Discord where anyone can come in. Yes, it will do a human check, but there's AI that can get past even the best human checks right now, and they can actually upload files that are unsavory, that have basically wallet drainers. That's a very popular thing to do in Discord communities right now. That is why a lot of Discord communities for crypto have only just reopened. I know that Crown has started talking about it again. He talked about talking about it, I believe, in his server, and because that's a real problem. So, and I don't want somebody to get their coins robbed because some unscrupulous character has created some sort of a wallet drainer. And there's no Discord has had very poor filters for that stuff with Trojan horse files, basically. So that will be, we'll get that up and running, but I do feel as though that needed a little bit of explanation. And yeah, that's gonna do it for today. Long week. Keep an eye on those important areas with Bitcoin. It's probably the way Bitcoin goes. It's probably going to be the way your altcoin goes. So if you have any questions, hit me up on Twitter or X. Go ahead and watch the Bitcoin in 60 seconds videos, as I will, of course, be uploading one later today after we see where price closes. And we'll go from there. I will speak to you guys again on Wednesday in live stream format. You have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.